Good Wednesday morning, everyone. Can you try talking again, Russo? Maybe it was just that broadcast, because my speaker's clicking now. It's looking like it wants to make a massive move down here. If it does, let's see if we can't get filled for a quick pop back to the upside. But I'm going to have to be sneaky about it and put my sell order in if we get filled right away. I just want to trade today. I haven't really been trading at all for a while now. I'm getting the trading itch. Alright, so anyway, I can't hear you, which kind of stinks. I really want to find out what's going on, why I can't hear you, because that defeats the purpose. How about now? Did that do anything? I mean, it says it's all active. I don't get it. I'm looking at this stuff like I know what it is. But, yeah, I don't get it, so. JBL flip. JBL flip. Microphone, everything looks like it's fine. I don't know. I'm just going to have to, I guess, uninstall this when we're done and reinstall it. So, anyhow, if you got any questions, just type. I don't think it's anything to do with Discord, is it? Mute. Unmute. Share your screen. Good morning, Bachi. Yeah, so if you guys got any questions, just type them in here, because I don't know why my speaker's not working. It works for everything else, but it's just not working right now for that. Oh, you know what? Let me see this voice connected. Oh, yeah, I don't know. This is what we went through before, and I figured it out on Discord. Let me bring this down here and look real quick. I think it was something in the settings somewhere. Maybe it happened again. Devices. Come on. Voice and video. This could be it. Hello. Input. Output. I don't know. Try talking now.
I'm talking. Can you hear me?
I can hear you. That was it. Perfect.
Oh, good job. Good job.
All right. Much better.
You're on.
Now we're talking. Now we're cooking with bacon. All right. So I was showing Russo this morning, right? Remember I was showing you guys a little bit about trading the channels, treated exactly like a range. But this is why the no trade zone is just so important, right? Sometimes price action will work nice in it, but typically you're going to see this mess, right? Where it's one up, one down, one up. I mean, this was some serious choppiness in this, no trade zone. But so I was excited just to show you guys that. Again, you're setting it up identical to our sideways range. All right, this is actually, it's just, the only difference is the way that it's going to look, right? And to set this up, like to get rid of, if you come to your tools, you hit on multi-line, and that's how you can draw your no trade zone with the multi-line. And once you're done drawing it, just double click to get off of it. So that's how you would do your no trade zone there. You're not going to be able to color it in like you do here. You might be able to, actually. No, doesn't look like it. But anyway, you should, you'll know that that's what it is. But, that's why it's so important not to trade in that zone. It'll keep you safe. And remember, at the bottom, you're not looking to short. At the top, you're not looking to go long. So that was the little treat. And then the other treat was, remember yesterday I was telling you guys that I like that one pattern to develop, right? This one little pattern here, like usually on the 15 and the 30 minute is where you're going to find them. But when you start seeing this type of a pattern, that's one of my favorite patterns to, size up for the downward move. Here, like I was saying earlier, I wouldn't really trust it because we had, the news that we had, and then this massive move at the time we were at. You gotta know when to use them, when to trust them, when to be patient, when not to take them, right? And that'll just come with time. So I set up this on the NQ today, just to for my live trading. So let's go over to the MNQ, which we'll do. And I didn't set anything up. I want to go over this again with you guys, all right? So we'll move all this stuff out of the way, right? We'll get everything out of the way so we just have an empty chart. This was yesterday's range. We're just going to go ahead for the sake of this and drag this range over here, all right? Just for the sake of it, just to do it. A lot of times, the ranges, the price will leave them and it'll want to come back to it. But that's typically, for each day. Hang on one second. Saying goodbye. All right, let's just get rid of that. All right, so now we got a naked chart. Okay, here's yesterday's price action. So the first thing you're going to do, let's just say we just came in right now. We're getting ready to get set up. Right away, I see, juicy range here, a nice juicy range here, all right? We could have called this a range, but I really wouldn't. But what would I do, all right? So right now, the very first thing I would do is I'm going to grab this line that we got rid of. I'm going to mark off yesterday's high. Hello, why are you not working? And I'm going to put it, notice where I'm going to put it. I'm going to use this level more than I'm going to use these two levels right? Because this kind of touched 1, 2, 3 right here. Okay? Remember, we're not focusing on the price. We're focusing on the general area. All right? The general area. If you're focusing on price, you're never going to get it. Never going to get it right anyway. All right? So then we're going to bring up one of these to support. So now we have yesterday's high, yesterday's close, which was right here. If you're looking down here at 4 o'clock, now you know what? I've been using 5 o'clock. We got to go by the 4 o'clock time frame when the market actually closes. Even though futures is open till 5, I thought about it yesterday. Go by the 4 o'clock close. All right, so even though they're very similar, all right, the 4 o'clock close is right there, so we could technically move that, but we really don't need two lines in the same area. All right, if it closes up here, just make a mental note of it so you know that, hey, this is not only resistance, it just happens to also be approximately where we closed. All right, so those are the first two things we marked off. Now let's go ahead and mark off today's high, pre-market high. All right, so from the close, before I go on, let's go ahead and mark off our other areas like we would coming in any day. All right. So far we identified our pre-market high, our pre-market low. Well, this would be our pre-market low. We identified yesterday's close, yesterday's low, yesterday's high. Does that make sense? Yesterday's close, yesterday's high, and yesterday's low. We marked those three areas off. Next area we marked off was the pre-market high. Okay? Now, let's open this up. And you guys asked if you need to start on the higher time frame every day. Just depends on where you are in the charts, right? Because like we said, if we go to the daily, okay, now that we made this move, right, and we're really close to the left, we want to mark off this high over here now, right? Our next high up. Okay, so that's when you would want to go back and mark your areas off, okay? I'm going to leave that one there because I'm looking for the bottom of it, and I'm also going to mark off the top of it. But anyhow, it's always best to just get in the practice and the habit of starting from your higher time frames, top-down analysis, until you're more comfortable with it. Why? Because it keeps you in the habit of consistently looking for information, okay? Consistently building your game plan. Once you become comfortable enough, right, and you're doing it every day, and, you know, it's second nature, you know, like you get in your car, what's the first thing you do? Well, my wife likes to check her makeup. I just put the key in the ignition, put my seatbelt on, right? So once you get comfortable and it's second nature, then play it how you want, okay? But just make sure you're checking where you are in relation to the higher time frame, right? What do you have to the left of you? All right, so next we got all those areas marked off. Let's start looking in here, okay? Where's a good place? Here's a nice, beautiful micro line. Why? We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 touches, right? You want that line, trust me. All right? So we're going to mark that off. It's now above us, resistance. There we go. Where's our next one going to be? 1, 2, 3, 4, 5, 6, 7, right there. Let's go ahead with that. Let me open this up more so you guys can see it. Are you guys both on your platforms now? Are you guys good to go? So you could be doing this with me?
Yes, I have mine, but I can't look at it at the same time you're doing it.
Oh, okay, I gotcha. Well, this is recording, so don't worry about that. You know, it would be beneficial if you have another monitor or something and you could hook up a second screen. It would be really beneficial for you, not only for this, but, you know, up here, I didn't tell you guys this. I might have told you and Russo, but put your higher time frames up here so you can flip between the charts and get an overall bird's eye view real quick, right? So if you don't have the access to a second monitor, you can just look at your 15-minute time frame for a quick reference, right? You could just say, all right, what are the 15-minute candles looking like? Are we double topping? Are we double bottoming? Are we, tweezer tops? You know what I'm saying?
Right.
It's always good to have that second look. So if you don't have a second screen, all you got to do is hit the plus button, type in the MNQ, and it'll add it. And then just go on that chart and change your time frame, and then just go back to your regular chart. And I'll put that in the boot camp.
Okay. Thank you.
And this is going to be a support right now that we're right at. All right, so now we have these three areas. Now that we open this up, this was kind of a range. But again, we do have the areas here where we had, rejection right in this area. Okay, so I'm going to go ahead and put another micro line. So when we come back up there, we have an idea of where we're going to take profit. All right, that's all these lines are for. The big ones are going to be your major areas. When I draw these lines, this is where I'm looking for profits, right? If this breaks, where am I looking to close my position out? And even right in here would be another one. You guys see this? 1, 2, 3, 4, 5, right? So this would be another area to go ahead and put a nice little line. So if we're trading back to the upside, right? Because if price just went like everybody thinks it does, boom, everybody would be rich in the stock market. It doesn't. That's why I'm teaching you guys to set your profit target, know where it's going to go, look left, and look for these micro areas, right? Because that's really how the stock moves, right? If you look back here, here was your micro area to your left. So if you were buying into the no trade zone, your take profit should have been just that little bit width. Don't get greedy and try and ride it all the way to the top, because 9 times out of 10, it's going to come back and take you out. You see what I'm saying? The more profit you lock in, the more money you're going to make in this game. But if you're setting your profit targets too high, right, you're going to end up getting stopped out more than you're going to win. And it's because even though, let's say you bought here and you didn't look left to know that, hey, we could have resistance in this area, and your mind was set on profiting up here, right? And you didn't take your profit here where you were guaranteed to get that money, okay, look, it would have came down and took you out right here. So you didn't lock in your profits here, and had you done that, you could have re-entered here, captured that move. Now this move and this move are equal to the move up to top. So you could have taken 2 trades, made that money to the measured move to the top of the range, but you could have took a third trade, caught it again, right? Not saying to ride it all the way up, but you could have got 3 trades that would have equaled more than just being greedy on that one, looking for that one move. If that makes sense.
Right.
All right, so we have everything looking good right now. I mean, we got everything marked off. If we do happen to come back up into this range, I mean, you guys can clearly see right here, right? This is going to be definitely an area. So we're going to go ahead and mark that off. Now, that is going to be a really key area to pay attention to, all right? Especially if we do come up into this range, because why? That could be a potential nice move. All right, that could be a big money trade. I see a little bit of resistance down below us right here. But it only touched once right here and once right here. We don't have multiple 1, 2, 3, 4, 5, 6, 7. We only have 1 and 2. So a lot of times price will totally disregard that. If we break out of here, right? A lot of times when you don't have enough, if you only have like this 1, 2 and not like 1, 2, 3, 4, 5, 6, 7, 8, an area where it really could not break, as opposed to just a small little boom boom, the odds are in your favor that you're going to get a really nice push right to that zone and you could collect that entire profit.
BB, bang bang.
Yeah.
So I think I'm understanding is these price levels. Those are pretty much price levels. And when it breaks that level, you're looking for it to break that level to possibly see if it's a good setup for a trade.
Well, like right now, all right, let's just look at some of the previous trades that we could have taken, all right? We were in this range, okay? Now, if we had this marked off as a range, all right? If we had this marked off as a range and this candle broke and you looked left, well, we're right, it broke exactly to the price level we would have been looking to get out of. So we really couldn't have taken that trade, because even though this first candle broke out, right, we would want to enter on the second candle, but that would not have been a good place to enter that, because if we look left, our profit is very limited. And what do I mean by that? Okay, if we have this area marked off, right, where price was rejecting and having a hard time breaking through, right? So if we mark this off and come to this way, notice this breakout bar completely filled that gap. So where else is it going to go from there? You know what I mean? Do you see what I'm saying? You don't have any room to run for a potential profit because it's already moved outside of the range and into the left, into heavy resistance, right? Or support. So, the odds of you having a continuation on the next bar down here weren't that good. Okay? So your better probability would have been looking at this as, if we break this range, since we have this range right next to us, okay, and we have the middle of that range, and if we open that all the way up, you see how I'm saying your profit potential was only right to here. And that candle that broke out of the top range hit your profit potential, so you're not going to take a trade on that because you have nowhere else to go except right here, and the odds of the next bar following through to here are it's not good odds. Your better position to trade this breakout would have been either on this retest, like I think we traded live, we shorted that back down, or to be patient and wait for this, right? Trade the bottom of the previous range. And don't worry if you're not understanding it yet. I promise you, you're going to get it. But the more we talk about it, the more you're going to see it. So you had this range here, okay? Let's go back and look at this range. Let's get it perfect, and we'll talk about the trades. Let's look here. All right, and this is
a stronger range for
what's
higher
that?
probability. So that range that you're looking at would be a more probable, a higher probability trade that it's a bigger, it's got more hits. Or no?
Which one do you mean?
That big one right there to the left, that range.
This one?
Yes.
Let me get rid of that. Okay, with this range, all right, this would be the 50% mark. So if you're looking at the range above us, right, we just came to the table. So we would have marked off this range. You would have automatically saw this range and this one, right, below us. All right, so you have 3 ranges to the left, but each range is ranging higher than the previous range. Okay?
Yep.
Right? So each range, so our trend is actually up.
Yeah.
All right? So you're in an uptrend. So that's your first clue when you look at it from the big picture. Remember, the higher time frame, we're still in that overall downtrend. There's so much manipulation going on, but you want to use the information you have available at the time, right? So if we had this here, okay, we know that our ranges are getting higher, all right? So the trend, even though it's sideways and up, okay? So you want to play in the direction, right? You're always better off playing with the trend than you are against it. Okay, but when you come into an area like this where you have 1 range, 2 range, 3 range, okay, we just got here today. Remember, if you're going to trade the breakout, you have to look left. Okay, so if we looked left, we would have known right away that we had resistance. You know, we had trouble breaking through this level. A really hard time breaking through this level. If we bring that over, that if we're waiting on that first candle, right? If we're waiting on the first candle to break out of this range, well, that first candle that broke out already hit our profit potential.
Right.
Okay, remember, when you're taking a trade, you want to look left to see where you have room to run. Okay, so on this case, okay, let's zoom in here. Let me get this nice and big. There we go. Let me delete all this. So in this case, okay, here was our range. Here was our second range. And let's just get it nice and right down to the candle wicks. Okay, here we are. This is what we would have seen. This candle broke out, right? So when this candle closed, right, as you had this set up, if you were ready to trade, you would have already had this area, you know, like locked in, right? You would have seen that we had a lot of resistance on the 50% mark here. So this candle, if you drew it over, closed in your profit target, because your profit target is going to be the range between here and where price struggled. So this candle took out any possibility of making a profit, right? Because your odds of coming all the way to here are not good. Okay, so if there was any profit to be made, you know, you lost any opportunity waiting on that breakout. You know what I'm saying? Because this was your profit range. Now let me show you what I mean. Let's go to the upside and I'll show you so we're not trading in this mess. All right, so here is our range, okay, for the upside. So let's say price is coming up, right? And let's say price is up here. We're trading in that top 50% and we get a break, okay? Now, where do we have to run? Where is our profit potential going to be between here and there? This is what I'm saying. This is actually a really good area. So let's bring this down and notice the area that we're concerned about is this area right here. Okay, so if we bring this area over, okay, this is our expected move. Okay, this is how high we're expecting this breakout to go. Now, unlike down here where you had a lot of resistance in this area, right here you don't. It's very minute. Okay, your resistance, your major area doesn't start until up here. So the potential for your profit on this breakout to the upside is actually this whole range. So you have 60, 20, 40, 60, almost $100 profit potential here. But on this breakout, because of this, you want to play it safe and try and capture, if that's $100, let's say it's 50, take your profit like right in this area. Look for a $35 to $40 move with one contract. And that'd be one of the biggest plays we've seen yet on a breakout because we've been in such tight ranges like down here. Okay, but if you want to trade the breakouts and you want to be consistently profitable, you have to be able to understand this. Where is price likely to stop? And you have to not be greedy, right? Just because there's the higher probability here is that price will actually come right up to this. Don't get greedy, all right? Take your money where you know price is going to at least come to, okay? And don't try and capture the entire move. Look to take your profits, you know, within reason of that move. Now, as you grow, right? As we grow and our accounts go from 500, once we get up to $1,000, then we're going to trade 2 contracts at a time. Okay? And once we reach $2,000, we're going to trade 3. And once we get up to $5,000, we're not trading the NQ anymore. We're going to go to the we're not trading the micros anymore. We're going to go to the NQ. But as long as you guys are comfortable with that, I'm not telling you, I'm not forcing you, because I'm going to go there once we reach $5,000. And the reason being is because it doesn't make sense anymore to trade. You know, if you're going to trade 5 contracts on the MNQ and you're going to pay $1.44 per contract, right? You're going to pay $1.44 times 5. So 1, 2, 3, 4, 5, 6, 7, 8, almost $9, right? When you could trade 1 contract of the NQ and just pay the $1.44 again. And you're going to make the same amount of money trading 1 of these as you will with 5 of these. That's what I was trying to explain to B Custom of why I don't want to trade the MES. Because you're going to pay more. You're limiting your profit potential. Let's look at the MES. All right, look at the MES moves. Okay, compared to the let me get on a 1 minute, 2 minute chart. So look at the movement of the MES. All right, the MES, like when I was trading the MES, it didn't matter what I did. It like always wanted to come for my stop loss, right? Because it doesn't really move. Like each movement is only like $2 or $3 per candle on average, right? If you look at the average true range, it's less than $3 per candle. You're making $5 per dollar move, but the odds are not in your favor to trade this and become profitable with a small account because of the small movement. Okay, so what I mean by that, and trust me, I researched everything to the T, and everything is in our favor on the MNQ. So let's just look at this here. All right, if you were looking to trade a range on this, all right, let's say we had the range here and we had this range here. Okay, look at this. Look, the same movement on this one is like you're already right there, and this you're talking about a $5 move. So even if you were trying to capture that, you're setting, in my opinion, setting yourself up for failure with the MES. That's my opinion. All right, if you can assess your own on this one. You only need $50 to trade 1 contract. So technically with 500, you could trade more, but again, you don't want to do that. You don't want to trade more than 1 with a small account, because what happens is, let's just say you put $50 in this account and now you're able to trade 1 contract of the MES. What's going to happen is if you're down $10 on that 1 contract, they're automatically going to liquidate your position, close it out, and they're going to charge you $45. So now you just lost $10. Now you lost $45 because they liquidated your account because you were down $10, right? Their job is to protect their capital and their margin. Okay? So that's why I'm saying I want us to have $500 in here to trade 1 contract of the MNQ, because they will not auto-liquidate us unless on that 1 contract we lost $425. Okay? Then they'll liquidate our position, but we're not going to come even close to that number. All right? So you see what I'm saying?
Right.
Remember, I put so much thought in. I really spent time in the futures market, understanding, how it moves, how each one functions. And the MNQ, to start off with, is our bread and butter. I traded the gold, I traded the oil, and there's so much money to be made on those, but you really have to know how to trade to trade those. So like I said, right now we don't need all that data. We only need the top of book, which is the MNQ and the MES. All right,
So
it's
we
also...
need $500 just to even touch when we're ready to trade. It has to be at least 500.
I would recommend, yes, nothing less than
Okay.
500, but a 500
Okay.
minimum. All right,
Okay.
and the reason I'm saying that, okay, could you technically with $250? Yes, but don't even let it come to that point. You know what I'm saying? Because again, don't worry about wanting to trade live right away. All right, like I was talking with Russo yesterday, I don't want you to even think about touching that live account until you have no more questions. Does that make sense?
Yeah, I 100% agree.
Right? So when you don't have any more questions for me, that's when we're going to go and start trading live. But until then, whether you think it's a stupid question or not, ask it. All right?
Okay.
Because, and I'm going to, that's why I want to focus just on this one thing right now. All right? There's so many ways to trade it, but I just want to go little by little by little. So if you don't have the $500 and you just got 25 right now, don't worry about it. Just put that in there so you don't have to pay for the, they'll charge you $12.50 if you have no money in the account. They'll charge you $12.50 per month to use the simulation account. So just throw 25 bucks in there to avoid the $12.50.
Okay.
Because as long as there's something in your account, they're not going to charge you. They're only going to charge you for the data per month. And the top of book, it looks like they raised it to $4 per month. So, that's nothing. If you need $4, I can cash app you the money to do it. I don't mind doing that.
Thank you.
But yeah, so don't worry about it. All right, when you're comfortable, you have plenty of time. If you can't afford it, put $25 a week into it. You know what I mean?
Yeah. Right. That sounds good. Yeah. I mean, I started it. I opened it up already with $200. So I'm gonna have to. I'm not in a rush to trade like you said. I want to know it. Thoroughly before I even touch it.
And this is, that's what I can't stress enough. And I don't mean to cut you off, but trading is. Everybody thinks trading is so easy, and I'll tell you right now. From where I stand, yes, it's the simplicity of it is mind-boggling, because like what you go through as a beginning trader, and you have all this information being bombarded from this guy and that guy and YouTube and ads and everything, like use this indicator, use that indicator. It can be overwhelming, and if you just listen and follow what I'm telling you, it doesn't matter how long it takes you to go live, because when you go live, this $500, I want this to be the last money you ever deposit in the market again in your entire life. Okay, from here on out, after this $500, the only thing I ever want you to do is withdraw money from the market. So don't worry about how long. If it takes you 3 months, okay, let that 3 months be, time well spent, because you'll have the rest of your life to come here every single day and withdraw money.
Right.
All right. What I'm teaching you guys, nobody can ever take away from you. All right. So if you take the time needed to learn it and master it, especially in these markets, you will be set for life, and you'll never have to worry about money again. But I'm not going to get you. I'm not telling you like they do. I'm not saying, guys, let's go in and make this kind of money right now. Right. Because we're not. And I don't want you to. When you do go live, we're going to practice your price target, okay? Each trade, all I'm going to have you guys look for, like the first week, is $6.50 per trade. Because I want you to get in the habit of getting that emotional, yes, I just won, right? I know what I'm doing, I won, right? And take 4 trades per day for $6.50 for the first week. The next week you're live, I want you looking for $12.50 per trade and 8 trades per day if the opportunity arises, right? Because if you think about it, this and this for the first 2 weeks are going to add up. So this is what? 6, 12, 24. This is 25 per day. That's 125 for your first week. Okay, double it for the next week. So that's going to be 250. So in 2 weeks you made 375. And then you can see the snowball effect it will have. You know what I'm saying? So don't think of it as, oh, I'm only making $6. Think of it as I am actually profitable for the first time in my trading career. Right? You want to build up that the mental end of, trading. Okay? You don't want to go in and say, you know what, I'm on my first live trade on my first account, I'm going to look for a $50 profit, and I'm going to set my stop loss at $75, and then the very first trade you take, it hits your stop loss. That's gonna ruin everything you learned, right?
Bang.
Yeah.
So tomorrow, if we have second screens, we should put up our Tradeovate and set our zones and everything along with you.
You can do that. Yeah, that'd be an excellent idea. But
You have two people on here, by the way. You have four people.
Oh, awesome. Good morning, guys. Welcome. I can't see who's there, but welcome aboard. But
Crip and Little Red.
Oh, hey, good morning, guys. Good morning, good morning. I should have this set up for our boot camp today, done, complete. So I will post it in the 30-day boot camp here. If you cannot access that room, let me know so I can add your name to it. And you can go in there and watch the days up until today. But we're only on this will be day 5, I believe. But it shows you exactly how to set up your charts for the pre-market game plan and get ready to trade. So if you don't, just drop a message in the group chat, say, hey, add me to the 30-day boot camp, and I'll add your name there. Because we're not...
And those boot camps are not, you know, what you're still editing, and it's not the final. It's your initial. Okay.
Yeah. But that's, each day that goes on gets better and better. So now we're getting into the learning. All the first days were kind of the lingo, the technical side, you could lose your account and all that. But now we're getting into setting up the charts and then trading the ranges and then all the other strategies from there on out. So, but
it looks like right now it's making higher lows. Is that true?
It is.
Break the resistance.
And if you draw a line right here, right, what did it just do, right? We broke through and we retested it. All right, remember, you're always looking for that break in the retest. Even here, we broke out of that channel and we retested it, right?
Right.
If you look here, we broke out and we retested it. If we look here, we broke out and retested it. So you're always looking for that initial break. But now, does that mean it's going to continue? No. But if you look at this as the right side of the roof, we did break out of it and we did retest it. But, do we just want to rely solely on that? Not really, And again, what time is it? It's 9:14. Remember, we're coming into the bell. But who can tell me a huge important factor of where we are right now coming into the bell? What have we not talked about yet that you guys should know right now? I'll give you a hint.
Setting the box for 8:30 to 9:30?
That's part of it, but what are we right now? We are right now currently sitting at what? 100% net short. Right? This was yesterday's close. So right now the overnight inventory is 100% net short. So what does that tell us? Go ahead, guys. Somebody tell me. What's the high probability trade? The higher probability trade, to come back and fill that gap. Right now, right, if we're 100% net short, if the market closed here and it opens here, it's imbalanced. The market doesn't like to be imbalanced. So just like yesterday, remember, we opened with a gap to fill, so we knew within the next 24 to 48 hours, we were coming back to fill that gap. Same thing today. Let's say we open in this area and we continue selling off. We know we have this massive gap to fill, and the market's going to want to come fill that, right? But right now, the opening down here is in the market's favor because, the market makers sold a boatload of call options to people yesterday, right? That they're sitting on a boatload of money right now, so they're not going to be in any hurry to bring this thing back up. You know what I mean? They're going to be in no rush to bring this up, right? So, in my opinion... All right. Again, don't think like a retail trader. Think about being smart money. Think about how the market makes money. It would be in the market maker's best interest to let this market trade sideways for most of the day, right? What's that going to do? It's either going to force them to close out their position right away, right? The smart ones, I would want to say never even went long. But the ones that did, a lot of them are gamblers. They're going to hold it, right? So the market makers know that. So it's in their interest to collect all that time decay, right?
Yeah.
Everybody who's long on all these big names, Tesla, Amazon, Google, Meta, right? Meta's got earnings tonight, right? There's some millions of dollars out there right now in options. And I would like to assume that many of them are super bullish, right? I don't know what it is about the world being so bullish, but people just love buying them call options. So right now, we're 100% net short, okay? So the higher, although the higher probability trade is to the upside, you know, we have those major earnings coming out both this morning and tonight, right? But it's in the market maker's best interest to not come back up there really quick, right? Could we see that? Could we rip right up like yesterday? Sure, we could. But it is a high probability trade up? Absolutely, right? But is it in their best interest, right? Are they going to make a lot of money by ripping it up? No. So it's in the market maker's best interest to keep this market kind of chopping around all day, right? If we're going to move up, right, we're going to see just what we saw all morning. We're going to see the market move up gradually, right? It's going to move up, but trade sideways. It's going to move up, but trade sideways, right? Because they want to collect all that premium, right? Again, that's why I love selling options. Because when you get into garbage like this, it's, you know, you're collecting all that insurance.
So net short means that there's an abundance of long positions or calls. So from our end, you're saying we would just be trading sideways, and the expectation is that it would most likely go to the downside?
No, what I'm saying is right now the market is imbalanced. All right, from last night's close, which was all the way up here, right, to where we are right now, the entire market is on the downside, right? The entire market is 100% net short from last night's open. Okay, so that means more traders are shorting the market than going long. But the market doesn't like to leave this imbalance up here. So knowing that, right, the market makers, how do they resolve that problem? How do they find balance in the market again? They're going to want to bring the market back up to yesterday's close, right, to get the market back in balance. Because if you look at it as a seesaw, okay, if you look at it as a seesaw, and right now, here's the market. The market is 100%. Everybody in the market is short. So the market doesn't like to be like that, right? It likes to be balanced. Okay, so now that everybody's on one side of the market, how does the market rectify that? It comes up to get everybody out of their positions so that seesaw can then find balance, right? So it's imbalanced. The market, you see what I'm saying?
So
Yeah,
that's.
so
we were. Sorry.
Go ahead.
So does that fill the gap? Even though it's gonna trade sideways and chop around, is that considered filling the gap up?
No, the only way it would fill the gap is if we reclaimed yesterday's high. Okay? But I'm not saying that this is exactly what's going to happen. I'm saying that these are the odds, the probabilities. Okay, we have major news coming tomorrow. All right, we have major earnings coming tonight. But yesterday, like I said, when we opened up here, we had this gap below us to fill from Monday's close. Okay, and the market didn't care about that. But look at how tiny that gap was. It wasn't really that big. All right, so the market ripped off, and knowing that, we knew that within the next 24 hours, the market was going to come back and fill that gap, and it did exactly that. Okay, so now we have a major gap above us. All right, major gap. The market doesn't like little gaps. It surely doesn't like major gaps, right? But with the market being so short right now, could we, the earnings should be coming out right now, but the higher probability trade would, yes, be to the upside because the market's going to want to fill that gap. But with that said, okay, knowing that the market was so bullish yesterday, okay, this is where you got to think outside the box. All right? So we can